Good morning, everyone, and welcome. Our participants are still streaming in, but we're going to get started. Welcome to the Building Atlantic Canada webinar for 2025. We're so happy to have you here. My name is Erin Ishuk. I am the Manager of Communications and Marketing here at the Atlantic Economic Council. And many of you know us, but just in case you're new to the council, we are an independent, nonprofit economic and policy research organization that is supported by our members. And much of what we do could not be possible without the support of partners and members. And we want to say a big thank you today to our two sponsors for today's webinar, Canada Infrastructure Bank and McInnes Cooper. Thank you so much for your support. And we have some representatives here that you'll be hearing from shortly. As I mentioned, we are a membership-based organization, and members are critical to allowing us to do what we do. It allows us to maintain our independence. And so I would like to just say a big thank you to all of our members who are on the call today, as well, in particular, our patron members who make it possible for us to do what we do. Before we get started, I would like to acknowledge that we are in the traditional and unceded territory of the Mi'kmaq people. Wherever you are participating from today, we are on lands which are traditional and unceded territory of various First Nations. The Council is pleased to have members drawn from Indigenous communities, to have partnered with many Indigenous groups and communities on many projects and research. And we've published a number of reports, which I will share in the link in the chat shortly. There are over 136,000 Indigenous people in our region, about 5% of our population. And we know that this is a growing economy. We are grateful to be a part of and have many partnerships with those communities. And so just a couple of housekeeping items before we get into the discussion. Panelists and hosts will be able to see your questions in the chat. So please send us any thoughts that you have. We will be getting to a live Q&A in about a halfway point. So anything that you want to ask our speakers, please just put it in the chat and we'll make sure that they get to it. Everyone who registered for today's session, whether you're on the call or not, you will receive an email from us by the end of the week with a recording of the webinar. Our investment outlook publication, which is hot off the presses, will be published today, as well as the slides that you'll see here today. So now I have the pleasure of introducing our speakers here today. First, I'll start off with John Casola, who is the Chief Investment Officer with Canada Infrastructure Bank, where he leads the investments team. John is a recognized leader in the Canadian infrastructure sector with extensive experience in lending, structuring, and advising on project finance and public-private partnership. With over 20 years experience, John is responsible for CIB's investment and advisory strategies, including capital deployment and asset management. John will be sharing a few remarks and joining Patrick to answer your questions a little later on. Next, we have Peter Mackay from McInnes Cooper, where he provides strategic counsel to business and public sector leaders across Atlantic Canada and beyond. He started his legal career here in Nova Scotia as a Crown prosecutor and worked as a general practitioner before entering politics, which many of you may know him from, in his former role where he served in the Parliament of Canada for over 18 years as cabinet minister to many portfolios that would be relevant to today's discussion, including the Department of National Defence, Foreign Affairs, and ECOA. Peter will be moderating our live Q&A a little bit later. And finally, Patrick Brannon. Patrick is here with the council. He is our Director of Major Projects and Senior Researcher here. He's been active in economics and business for over 25 years, and he serves as the lead for much of our work and research, including today's major projects discussion and our recently launched Future of Healthcare Sector Research Series. So Patrick is going to give us an update on the investment landscape here in Atlantic Canada, along with the release of the council's latest major projects inventory. So without further ado, I'm going to hand it over to Patrick.
All right, thank you, Erin. Yeah, this is always an exciting time for me with the major projects coming out. Because the last couple of months really diving into what's happening in Atlantic Canada, and there's a lot happening in this region that we're very excited about. For those of you that aren't familiar, the major projects inventory is something that we've been doing for a very long time at the council. When we think of a major project, we're looking at anything that's over $50 million. So there's a lot of projects over $50 million in Atlantic Canada. That's a change from what we had previously. We had a floor of about 25 million before, but we did raise that this year. We break the projects into 4 stages of development, from those that are underway to those that are, proposals, have some economic rationale, but still need a lot to go forward. And we also break it into 12 industry classes. So in terms of what's happening this year, Here's the breakdown by province. The first column looking at the number of projects. 471 projects in Atlantic Canada this year. The second column looking at the potential value, so what could happen. $320 billion of potential investment in Atlantic Canada. There's some big projects in there. The Gull Island project in Newfoundland's a $25 billion project. There's hydrogen projects that have been proposed in the region. So there's a lot of big projects in there. And then what's happening in the last column is our value for this year, $18.3 billion of spending in 2025. And as you can see, Nova Scotia leading in potential value and current year investment. So looking at our trend over time, the baseline forecast, which is a red line there, shows a steady progression from about $10 billion in 2020 to over $18 billion this year. So there's a lot of growth over the last few years, some of that driven by population growth and the infrastructure needed. We've got a lot of electricity spending and renewable spending. And this year, that higher electricity and renewable spending and housing is offsetting some weaker investment in Newfoundland and Labrador. But then we have our high growth scenario, which includes projects that are in under development, but still have some things to get through to move forward. And that includes the massive Gull Island project. Early work could get underway that year if an agreement is reached between Quebec and Newfoundland and Labrador. Quebec's hungry for energy, and Newfoundland has been looking forward to that project for many decades, and now hopefully looking to move forward. Also, the Beta Nord project in Newfoundland and Labrador, again, multi-billion dollar project that would see a lot of investment in that province. So if both of them were to move ahead, 2027 could be a huge year for Newfoundland and Labrador, as those two projects, if they run concurrently, we could see another boom like we saw back in the mid 2010s when the Hebron project, the Muskrat Falls project, and the Long Harbor facility were all moving forward. But other projects like the Mactaquac project, a large hydro project that needs refurbishment in New Brunswick, is several billion dollars. There's additional electricity generation that both Nova Scotia and New Brunswick are looking at around natural gas conversions of coal. And there's lots of potential again for hydrogen, but we've had a bit of a slowdown in momentum on those projects. So where's it happening? Well, Nova Scotia, as I mentioned, has surged to the top of the provincial leaderboard here, doubling from about more than doubling from about $3.5 billion in 2021 to over $8 billion in 2025. New Brunswick and PEI both growing steadily. Newfoundland and Labrador seeing a bit of a downturn this year because of the slowdown in construction on the West White Rose oil project, which was a very large project, and a couple of other mining projects as well. And in terms of what industries are driving investment, the electricity sector is the biggest one, over 800 million more this year than last year, as several wind farm projects come online in Nova Scotia. There's several that are planned in New Brunswick, one in PEI. There's other renewables that I'll talk about in a moment. We've got all the housing investment, $2 billion of housing investment more in 2025 than there was in 2019. Another $600 million of increase this year alone. And that infrastructure and the health spending that is needed to support a growing population are the main drivers. And as I mentioned, the oil and mining sectors in Newfoundland and Labrador pulling down growth a little bit this year. A lot happening in our region cities. They're one of the major drivers of what's happening in terms of growth. You see Halifax, it was about $2 billion of investment for several years prior to 2020, but steady growth since then, up to $4.5 billion this year and potentially $5.5 billion next year. So we've got defense-related Irving shipbuilding growth, all the housing and infrastructure that's being built to support the growing population. There's over 10,000 apartments under construction in Halifax right now. And that sounds like a lot, but it is. It really is. You look at a similar sized city like London, Ontario, only has 4,000 units under construction. Edmonton, which is 3 times the size of Halifax in terms of population, has 9,000. So Halifax is definitely punching above its weight and closing the housing deficit that's built up over the last few years. And we're also seeing very strong growth in cities like Moncton and Charlottetown, where there's been very rapid population growth, and again, the investment in infrastructure to support that growth. A little different story in St. John, where there's a lot, there is some of that growth, but also manufacturing growth. JD Irving and Irving Oil with large investment programs this year. Um, so renewable energy spending, that's an area where we're definitely seeing strong growth. $2.7 billion of spending in renewable energy projects and electricity projects in 2025, growing to over $3 billion next year and potentially well over $4 billion in 2027. The onshore wind that I mentioned, there's lots of those projects. There's plans for new procurement that's bringing other additional wind on in 2027 in Nova Scotia and 2028 in New Brunswick, and also more planned in several provinces. Transmission upgrades, the intertie project between Nova Scotia and New Brunswick is moving forward. There's a large battery storage project that Nova Scotia Power is working on in Nova Scotia. The hydro investments that are planned in Newfoundland and Labrador. There's some additional projects planned there that will happen over the next several years. Utility capital spending also rising significantly so they can, as they transition off of coal to renewable or other types of generation. And an important part of most of these renewable energy projects, really almost all of them, there's strong Indigenous participation. And those partnerships we're seeing more equity stakes in those projects, and that'll bring income back to the Indigenous communities and support their growth in the future. And I just want to close with a little bit of discussion around some of the factors that are influencing major projects in Atlantic Canada. For things for the environment to be strong to encourage investment, we want to see more green than red, of course. The green is some strong positive, the darker green is strong positive. And so the net zero transition is encouraging more investment in renewables and transmission projects. Population growth has really driven a lot of activity in our cities and throughout the region, really. Public sector spending has been very high over the last few years and growing this year to again support that growth in cities and other parts of the region, improving infrastructure. Um, and then, things are improving around financing too. We've had some, very high interest rates 2 years ago, this year improving, and we expect to continue to improve, which will support continued development in infrastructure projects. But on the challenging side, labor, better than it has been. We have seen some improvement in labor availability. The job vacancy rates are declining in many industries, a bit higher in construction than it is in some sectors, and there's still some challenges there. But lots of programs underway to hopefully meet the needs that we have going forward. And then the international trade, the orange fella south of the border there has created a lot of uncertainty in markets, and that's something that we have to keep an eye on. But we've seen some good news lately and a better trend over the last month or so as we are hopefully moving towards a trade agreement with the U.S. and other trade agreements are being made in other parts of the world too. So that movement towards protectionism and tariffs, it's not going away, but we hope to see a better outlook in 2026. So yes, lots of things happening in Atlantic Canada, but we do still need more investment in machinery and equipment and other types of investment that will boost our productivity. And we need that transformative infrastructure too that we need to support interprovincial and international trade. And we'll talk a bit about that over the rest of the morning session. So I will hand it back off to John and Peter now to talk a little bit about how CIB is filling some of the gap in terms of moving some projects forward here in the region.
Terrific presentation, Patrick. Very encouraging with a hint of caution with some of the unknowns. And now we're going to hear from John Casola, who's the Chief Investment Officer, Canada's Infrastructure Bank, a very important player at this time. And this is such a timely seminar to talk about what's happening locally, but what's happening around the country that impacts us. So, John, perhaps I could ask you to start by just giving us an overview of the Canada Infrastructure Bank, how CIB is supporting infrastructure development across Atlantic Canada, and how we feed into the larger national outlook.
For sure. Good morning, everyone, and thanks to everyone for tuning in. It's a bit ironic that we're having this conversation. I mean, much of what we're doing, as you'll hear, is in the power space to catch up and build new power to power our economy, to power the growth in industry, all of those types of things. And we're sitting here in I know it's hot there as well, as I'm sitting here in Toronto in almost 40 degrees, which is going to be a real strain on the grid. Now, you guys know Torontonians to be of hardy stock. Um, so there's no talk of calling in the army yet. So we'll wait to see if that materializes. But anyway, on to more important issues. So who are we? For those of you who don't know the CIB is a federal crown corporation. It was created in 2017 and became operational in 2018. And we were seeded with $35 billion to build infrastructure in Canada. So why? What was the motivation? The founding principles of the CIB were that we have an incredibly huge infrastructure deficit in this country. You saw Patrick's great work and slides. That's just Atlantic Canada, and you project that throughout the country. The billions add up very, very quickly, and so I think there's a broad consensus that neither governments or the private sector alone can actually tackle the deficit, and that we need to work together. And so we created the infrastructure bank. So what do? We invest in infrastructure across the country that catalyzes the use of private sector capital. So what does that mean? I use the word investment. We don't do grants. We make investments. Having said that, we can make any type of investments. We have lots of flexibility in whether we do equity, whether we do subordinated debt, senior debt, anywhere in the capital structure, we can play. We're actually trying to solve a specific problem each time we look at a project. We're prohibited from investing in a project, Peter, where there's no private capital alongside us. That's really important. The feeling is that if it's just us to another government lending them money, although there are lots of good projects that are deserving of that money, what that really amounts to is the difference in borrowing rate really amounts to just a grant from one level of government to the other. And that's kind
And
of
John, sorry to interrupt you, but does that mean that you can partner with multiple levels of government and other agencies like ACOA, for example?
Of course, we can. But at the end of the day, we're going to look to see what the private capital in the project is. So our kind of formula is we look at the project, we look at all the costs, we net out all the public money that's already in the project, and we look for a sharing between the private sector and us. That's the way we do it. But we have several examples of partnering with. We just announced a fantastic investment, our first critical minerals investment last week in Strange Lake, part of the processing facilities, a rare earths minerals mine, very topical these days. The processing of the separation plant will be in Voisey's Bay. That is a partnership between us and EDC in phase one. So we can bring all of the different components of government together. That's not a problem.
Is there a threshold of government investment versus the private sector?
Well, we like to have a look. I have a soft line in the sand, as I like to say, of $100 million of CIB investment. So we're really looking at catalyzing those big projects. Having said that, we have a number of exceptions. We have board-approved exceptions. For instance, in the Indigenous space, you're not going to be a very popular guy if you arrive in Indigenous communities and say, "Hi, we're here to help, and we have to spend a minimum of $100 million to improve your communities." Those tend to be smaller, but incredibly important to those communities. So we have a $5 million minimum in those communities. In housing, we'll have a $30 million. You can talk a little bit about what we do in housing. So I think we try and be realistic. We're trying to create products, Peter, that's not a one size fits all, that really is, I think, responsive to the specific problems that we're trying to solve. So we partner with utilities all across the country. We partner with provincial governments, municipalities across the country, particularly in the housing space, in the water wastewater space, trying to be as helpful as we can without without trying to say this is our product, take it or leave it, or creating a whole bunch of products that actually don't work for people. I think that's a huge difference between us and maybe some of the structures and products in the past. The other thing about us is, look, the first question we're going to ask you when you come with a project is to say, does it fit in our mandate? You'll see we put up on the screen as a backdrop. Those are the buckets that we can play in. So those, when we were created, those are the men. If it's anything outside of those, we need to go back to government and get either an exception or get our corporate plan changed to allow us to do it. You can see we have thrown quite a few things into the green infrastructure bucket. So we do have some latitude to interpret what that means, but within a fairly narrow band. So how do we determine, what it is we're going to look at? I like to describe ourselves as, like, I like to say when I speak, if you remember 2 words of what I say, only 2 words, remember the words gap filler. We are a gap filler. What's the reason? What is the gap that your project needs money? Why is it not getting financed the traditional way in the markets? Because we don't want to crowd out private capital either. And those generally amount to 3 categories. One is the economics just don't work. One of my favorite examples is, there's a transmission line we've been working on for a while to bring clean power from Manitoba up to Nunavut to get them off, all those communities off of dirty and unreliable diesel. Well, there simply aren't enough ratepayers in Nunavut to actually cover the costs of that. So that's just an economic gap that we're trying to deal with there. The other one is a risk gap. And the risk gap goes like, if you're building a new port or if you're building an export hydrogen facility, let's say, somewhere in the country, and there's no guaranteed offtakes for 10 years, that's the stuff you can use to finance. If there's no, because that's not the way that the sector works, we will take the risk of ramping up. So we will try and de-risk the project, take the risk. The very sophisticated term we use for that is, if you build it, they will come strategy. So, we'll build it. We'll take that. We'll have long-term capital at play. We'll take the risk the market won't. Wait till the volumes hit, that the business case proves itself out, and then private capital will come in. Quickly, the last part, which is the most, we've seen the most activity, particularly in Atlantic Canada so far, because of the heavily reliance on power, is what we call affordability. Atlantic Canadians have among, maybe carve out Newfoundland, but Nova Scotia and New Brunswick for sure, among the highest power prices in the country. To build all of the power that we need, to decarbonize, but as importantly, to strengthen and build the economies there, you need more power. It is a huge burden to the ratepayers of Atlantic Canada and everywhere to pile them on with all of the debt and all of the costs of building that in an accelerated way. And so what we try and do is provide long-term cheap debt in a structured way that helps to bring down the cost of that, so that the utilities can actually build that much needed power faster. So those are just a couple of examples, Peter, of the way we play and what we're looking for.
That's great, great information, John. And you mentioned you're from Toronto. We're experiencing some heat down here as well. We've got the great Atlantic breezes, but surely a few people have their air conditioning on, and it's always a reminder that we are still quite reliant on coal in 100%. Atlantic Canada, yeah, despite our significant natural resource deposits in the West, in particular, and other parts of the country. I just want to come back, and you've touched on this, but the criteria that CIB use when you're actually evaluating and selecting these projects for investment, you've touched on some of them, but perhaps you could unpack that just a little further. And then looking ahead, Patrick's touched on this, but what are some of the big CIB bets, the future investments in Atlantic Canada that you see really responding to some of the needs that have been identified, whether it's labor, whether it's energy, whether it's some of our exciting projects in electricity?
Yeah, for sure. Look, I started touching on a few of them. So what criteria do we look for? It has to be in our stated mandate parameters. So it has to be in one of those sectors. B, it has to be revenue generating, because if you have to pay us back, and you have to pay private capital back that we insist on. There needs to be some sort of a revenue generation. So that takes us out of the realm of social infrastructure. We don't do schools, we don't do hospitals, we don't do any of the things that are traditionally financed by governments. We talked about what the gap is. We're going to look for what the gap is. That's another thing. We also look through every project through three distinct lenses. Every project. One is a clean lens. What are we creating more emissions? Are we creating fewer emissions? What are we doing? How is the project going to contribute to Canada's to Canada's output of GHG emissions? That's one thing. The second thing is we look at all projects through an Indigenous lens. Is there Indigenous involvement in the project? If not, can there be Indigenous involvement? And we're constantly pushing our project sponsors when they're not Indigenous on that question. A great example of that is in Nova Scotia. We financed the largest battery storage facility in Atlantic Canada. That is a deal where we provided our very first Indigenous equity loan. We are now providing money to Indigenous groups so they can buy equity. And I think we have the Mi'kmaq 13 different groups Mi'kmaq involved in that project, really taking advantage of that loan. So that was our first IAI loan, as we call it. And Indigenous equity loans are becoming more prevalent across the country. So that's the second lens. The third lens is all about economic growth. And very timely, Peter, as we talked about in our pre-calls and today, that's part of the theme. Everything we're talking about now involves strengthening and growing the economy. That's why we did Strange Lake the way we did. It's a much earlier critical minerals deal than we would normally get involved in. It's much earlier stage, but we felt, given the timing, given what's at stake, given the specific rarity of those rare earth minerals and the Chinese controlling 95% plus of the supply and how important they are to the world, that we needed to actually extend, and all the circumstances of that allowed us to take more risk. So those are some of the factors that we'll look for. Of course, we'll look for the stuff that the traditional lenders look for as well. We want a strong team. We want know-how. We want the capital structure to make sense. We want the people to have experience and be able to deliver the projects, because we're all about outcomes. We do have an ROI, as I like to say, but our R, unlike traditional investors, isn't money. It's outcomes. So we're always going to be looking at what outcomes we're producing for the betterment of Canada.
That's terrific, John. And we're going to open it up to questions here in a moment, but I want to just remind everyone that this recording and the slides and the information will be available and sent out to you later in the week. And I think I want to bring Patrick into the discussion for a couple of questions before we kick off the audience participation part of it. And John, Patrick, we've heard a lot coming from Mark Carney's government with respect to the focus on nation building projects, which is obviously in the wheelhouse of CIB and some of our other government agencies. And we're really delving in now to what gets those investors in the game. It's early in their term of office, of course, but the premiers, the territorial governments, all seem to be lining up behind this approach. Can either of you or both speak about the types of projects that you see meet that specific description of nation building? And specifically here in Atlantic Canada, what are some of the projects you think would fit into that category? Are they the Wind West that the Nova Scotia premiers talked about? Hydrogen is certainly in play. Pipelines, again, revisitation of Energy East, perhaps, and many others. But perhaps you could just touch on your views of nation building.
Yeah, well, I mean, from what it sounds like, we're really thinking about connecting different parts of the country with new infrastructure, strengthening Canada's ability to trade. It's really important. We've talked a lot about interprovincial trade, and nation building projects are really interconnected. We need construction workers and materials and the goods and services to be able to move freely to make these projects succeed. So When we think about what's happening in Atlantic Canada, we've already seen projects moving forward that are nation building, like the transmission intertie between Nova Scotia and New Brunswick. It's a nation building project that's getting started. It's a partnership between the provinces, the federal government through the investment by CIB and Indigenous communities. So we need more of those types of projects to go forward, and hopefully we continue to expand that transmission access through New Brunswick into Quebec and across the country, so we can help each other out and provide each other with clean energy as we need it. Um, but also like the hydro project in Newfoundland with Hydro-Quebec and the government of Newfoundland now in partnership on a project, breaking down that long-standing barrier that's in between to those two provinces because of the Churchill Falls deal, but moving ahead because it helps them both. Um, in Nova Scotia, the concept of Wind West has been pushed forward by the Premier of Nova Scotia. That would generate energy offshore, wind energy offshore Nova Scotia, and send energy to other parts of Canada through hopefully that expanded transmission. And then there's things like a natural gas. The natural gas pipeline ends in Quebec that comes from the rest of the country. So continuing that on to New Brunswick would help, and meeting it with the Maritimes and Northeast pipeline that's already in place. That would reduce our reliance on the U.S. For natural gas and provide new markets for Western Canadian gas. So there's lots of win-wins, but certainly a lot needs to be done to move these projects forward. John, has anything else to add on that? Yeah.
John, anything further on nation building, like the Great Railway?
Yeah, just a couple of comments. I think Patrick covered it really well. Those are all of the things that we are looking at. Like I have been privy to, I've seen a couple of lists. I always ask the question: is this the list or a list? I mean, no one knows what the list is these days that we hear so much about. But it's exactly what Patrick described in Atlantic Canada. It's those types of projects. I think there's a huge emphasis on trade and transportation. Anything that facilitates trade, that lessens that dependency on the U.S., that expands our footprint, that makes us more self-sufficient in critical minerals, in food processing. In the last budget, starting not in the last budget, in the Prime Minister's platform.
Hopefully, the future budget.
Yeah, the future budget,
soon.
Right? Soon. The CIB was noted to take a bigger role in food processing, including fisheries. Great, welcome the challenge. We don't know what that means yet, so we're still waiting for more. We're started those discussions with the sector players, but I think we're working on the ports. Big port in Vancouver, biggest in the country, heavily involved in that. Port of Montreal is a huge project, been in the works a long time. We've had discussions with at least 5 different ports in New Brunswick and in Nova Scotia, who all have plans for expansion and specific use or general use. I think trying to nail down those projects. Power and clean fuel for export is always a big one. There have been a few fits and starts, stop and go on projects like that, but that's the world economy. I mean, it's hard to produce what we produce at the cost we produce it and get willing off-takers at that price in the rest of the world. And so there needs to be an alignment, I think, of kind of things that happen to make these things go. On the other hand, you don't turn on a dime on these things. You need to start now, regardless of the conditions, and bank on the fact that the conditions will be there in the future, because then it's going to take you 10 more years to build them. And so those are the kind of projects that we're looking at. The only other thing that I'll throw in that we haven't talked about so far is huge emphasis on northern sovereignty, defense infrastructure. You'll have a soft spot in your heart for that, Peter. Lots of talk about developing Grays Bay roads, port infrastructure, roads in from kind of even across northern Labrador to get critical minerals out. Lots of different discussions on those fronts, but that's where I'd leave it.
Those are great points, John, and you're right. That Arctic sovereignty piece, and in particular of interest to me, is the newly announced defense spending, where we could see as many as 2 to 3 new Arctic permanent installations for the military. And of course, we may talk a little bit further, given time, about defense infrastructure spending across the country and investments in numerous military bases. Atlantic Canada has a disproportionately large number of personnel and bases here, given our history. There has been a couple of allusions to what the government needs to do. From budget to pulling the trigger on some of these projects and moving forward. And of course, the whole issue around tariffs, the uncertainty that has created, our biggest trading partner with the United States being in the forefront of the discussion, as is the counter discussion around closer ties to Europe, where Atlantic Canada, again, because of geography, has great advantages. So I guess a combined question from the audience is, what does government need to do? And with respect to this uncertainty around investment, direct foreign investment and otherwise, what can be done? Is the president now sort of determining some of this, or do we have the opportunity through diversification and normalizing of trade in the near future? Is that going to unleash some of the potential that we're all talking about here? Maybe I'll send that to you first, Patrick.
Sure. Yeah, no, governments, it's encouraging to see that governments are thinking together. We all have our insulated economies that we try to protect, and that's one of the things with interprovincial trade that we need to break down, that we have to stop thinking provincially all the time and think nationally. And that will, fast track some of these projects because, as I mentioned, moving people and having different standards just makes it more costly for these projects, nation building projects, to get done. So it's encouraging that the provincial and federal governments are starting to get along a little bit better than they have in the past. So that's definitely encouraging. You mentioned tariffs. I know when we've been talking to companies during the course of this survey, they are concerned for sure about tariffs and their impact on projects, and it's definitely one of the issues that they're thinking about. But they're still really concerned about costs and labor availability. Those are issues that are top of mind even ahead of ahead of tariffs. And the other thing that people still talk a lot about is slow government approvals. Very frustrating for developers, and the ability to fast track projects is a focus of the current government, and that should help, move projects forward faster, and that's better for investment in the region as well. So all those things, we're seeing positive signals from government. I think that's starting to resonate in the investment community, and despite the tariff challenge, the things are starting to look a little bit better there, and continuing to invest within Canada is something we've not done enough of. John talked about the infrastructure deficit we have, and a lot of it is east-west, is more so than north-south. So those are things that we can build upon and hopefully re-energize our economy.
Thank you. John, anything on tariffs, cost of supply, steel, aluminum, trade, road?
Yeah, look, maybe a bit of an unpopular, controversial view here. I'm from the school that says this president might be the best thing that ever happened to our country. We have woken up to the dependency, to the complacency that I think that we've had as a country, all of us, in terms of our economy, and it's so much easier just to go north-south. We won the geographic lottery. I heard somebody say that, by being next to the biggest economy in the world, and it's just easy. It has been to this point, but I think there's so much good thinking going on now that we need to solve for all of these things. None of this is easy. I spoke in a panel yesterday, and the specific question was on tariffs and costs. I say this without exaggeration. Not a week goes by in my office where I'm not having a conversation about costs increasing 30, 40, 50, 100% on a project that we've been working on for some time. And that's the negative power of waiting and the negative power of the tariffs. From our perspective, there are two ways tariffs affect infrastructure. One is if you're sourcing materials to build or operate the infrastructure from the US, then you'll feel the tariffs because your costs will go up, your operating costs. The other is if you're building a facility for export to the US, and then all of a sudden your business case goes out the window. So we will look for, what else are you doing? Where else are you selling your product? We'll take a conservative view on all of that. But I think, look, the reality is, on CapEx, people are building in significant contingencies now, and even those aren't enough. And what that does is push up the cost of everything and makes projects less attractive. So we have to slay we have to slay those things. And one of the best ways I can think of is really simple: just get it done, get it done quickly. I think the government needs to. I'll be interested to see the way Bill C5 materializes in the real world and in practice. Is it really going to get government out of the way? I don't think government has to do a lot. I think it needs to just get out of the way in many instances. And I think the other thing I'll say is we see a lot of last thing I'll say is we see a lot of projects where provinces in particular, municipalities are the worst at this. But provinces say, well, we like what you do, CIB. We can really see the value. But you know what? I'm just gonna just pester the federal government for another year and a half to see if I can get a grant because we like free money better than we like your money, even though we can be helpful. And we see that all the time. And so when I get asked by the federal government, they don't always like this answer, but I'm a direct guy. They say, what can we do to help you guys? And my answer is sometimes like, you can say no directly and faster because then we can get on with it. As long as you leave a sliver of light open for grants, people will gravitate towards those grants. And look, we've all talked about lists. We've all talked about the enormous challenge. You saw Patrick's slides and the numbers in Atlantic Canada. We've talked about C5 and getting out of the way and internal trade barriers and all that. Not a lot of talk about who's going to pay for all this. So, like that's the challenge that we're going to have once we finalize the list, if there's going to be a list, and how we're going to get to it. And manpower is person power. It should be more politically correct. Is challenge number one at the very same time that we're curbing immigration and having those discussions about maybe taking a slightly different approach than we have. We're going to need more people than ever before to build these nation building projects.
No, that's such an accurate depiction of some of the challenge, even if the answer is no, but getting to a decision. And it's almost oxymoronic to have governments setting up departments to look at, downsizing or red tape reduction. And so set up another department or study it further. We've talked about energy, electricity, some of the other projects, but not a lot about transportation. I've got a question coming in here with respect to public transportation and maybe some details or breakdowns on investments that may be in the pipeline that are existing, pardon the pun, and particularly, I guess the city of Halifax has fallen victim to this, where there's, more housing, more people, more activity and cars on the road. And it hasn't really kept pace with the infrastructure. So are there other future plays with respect to transportation that we can hold out hope for? And is there progress to be made in that area specifically?
Should we take a stab at that, Patrick?
Yeah, you want to start? Yeah.
Yeah, sure. From our perspective, you'll notice if you went back to the first slide, we have a public transit. I'm not suggesting you go back, but I've been reminding you. We have a public transit bucket of $5 billion, and we have used very little of that. And I'll tell you why we have used very little of that is because municipalities that generally run public transit are loath to have private sector capital in their projects. Now, in fairness to them, there is often these projects amount to an extension of an existing publicly operated transit line. And so the complexities become challenging of integrating private capital. But where there's a new standalone line, our model would be to bring private capital alongside us, finance it in a different way, a different model. The revenue generated would pay for the operating costs, et cetera, et cetera. So it's very, very hard to do public transit. We have been trying to get creative and look at transit-oriented development and as one theme where we try to monetize the benefit. The other thing, governments, municipalities haven't done a very good job at across the country. This is an Atlantic Canada comment, is they create transit and all the people that buy up the land get rich along the transit line, and the government doesn't participate or traditionally hasn't participated in any of that. That's wrong. That's wrong, and that's public value created by public taxpayer dollars. And so we have several structures in place where we can monetize that increase in value by charging, transit-oriented development special charges. There are a number of different tools that we have to actually help build the transit faster and try and bring down the costs of that. But we're all ears in terms of listening to opportunities. It's just a particularly challenging, particularly because it's challenging sector for us. It's so expensive, and the revenues often don't actually pay for the capex as well. Sorry,
Well, there's a lot of politics in pavement, they say out here. And a quick question though on rail, one that's come in from the audience, and that is, have there been any discussions with respect to some of the major rail companies in Canada to improve rail transportation? And you'll recall, sort of in the dying days of the last Liberal government, a big announcement about high-speed rail. That perhaps is a dream, but in Atlantic Canada and in Halifax, to the city in particular from the airport, high-speed rail seems like something that's back on the minds of many.
Yeah, we're definitely hearing, that's something that it's in the longer term plans. We are getting to the in Halifax, getting to the point where it might make sense. So over 500,000 people in the city, and definitely some transit issues and traffic issues that are building because of our rapid growth over the last few years. And transit plans in many cities that were planned a few years ago are already out of date because of the unexpected surge in population. So planning for the future, making investments now, and those types of projects really do make a difference down the road. It makes it easier for people to stay. I mean, it's a big there are people who can't get to their jobs or can't get to hospitals or other things that they want to do because of the transit inefficiencies, the lack of routes, those kinds of things. So we need to unlock some of that to help people stay in our region too, because immigrant retention is a major issue, as is interprovincial losses that we've had in the past, and that can be a barrier for people if they are overly frustrated with their inability to move around the city or even to get to other parts of the country. So we'd like to see more of that investment, and in terms of rail generally, also that's very crucial for our ports in Halifax, St. John, Beldoon, and others, to have those strong rail links and solidify them and make sure that they're able to handle the future of growth in the region. If we do see internet or interprovincial growth, we need those rail links to be strong and able to move goods across the country.
Patrick, I got a very specific question directed to you, and that is your reference to the need to acquire equipment for major project infrastructure and to move these things along. It speaks of the Atlantic Investment Tax Credit, which does include equipment and machinery and buildings as being eligible. Do you think that allowing oil and gas and mining projects, for example, to once again also qualify for this tax credit would be a benefit to the region? And do you see that there is a way forward with projects in those particular resource sectors?
Yeah, and certainly lots of potential in critical minerals in Atlantic Canada. We've got almost all the ones that Canada deems critical. Newfoundland and Labrador especially is very open jurisdiction for mining. There's lots of projects that could move forward. If done right, including support from local Indigenous communities, can certainly happen. Um, but people in local communities need to see the tangible benefits and assurances that the companies aren't just going to leave behind a mess and take the money with them. So it's important that they start those conversations early in the process and help these projects move forward. In terms of equipment, there's lots of, I think with interprovincial projects, with nation building projects, I think procurement will start to move, look more to Canada to supply some of those goods and services that are needed for these projects. We don't just want to import, stuff from the States to make to create to build a bridge or something like that. We want to, have local suppliers that are benefiting from this. And I think it's important that we continue to move in that direction going forward so we can really maximize the benefits for Canadians when we move these projects forward. And you mentioned oil too. That's still very important to Newfoundland and Labrador's economy going forward. The Beta Nord project is moving in the right direction right now. Could definitely provide a huge boost to that economy there. Onshore gas is something that's being looked at again in New Brunswick and Nova Scotia, and that's important because if we do have access to cheaper gas, it brings down our energy costs and makes us more competitive and attract new businesses to the region. So there's lots of positives to looking again at some of the things that we've kind of tucked away and put aside in the past. But again, they have to be done right and with early consultation with communities and Indigenous communities as well.
No, that's exactly right. I'm going to bring you into this too, John, but the liquefied natural gas potential in Europe, Asia Pacific, many of those jurisdictions are coming to Canada now and saying, we'll take all you can sell us. And in Canada, of course, there's a reputation for doing it ethically, for doing it obviously at world price. What's happening in the world right now between Iran and Israel and throughout the Middle East, Russia in the invasion of Ukraine, all of this has really created not only turmoil, but uncertainty in the energy sector. If they were to close the Straits of Hormuz, for an example, all of that really does open up great potential. Once again, the refining capability in St. John, New Brunswick at the Irving Refinery. John, do you see that seriously moving forward? I mean, I don't want to provide too much commentary here, but I'm also concerned about national unity and what will happen in the West if we don't actually unleash some of that potential, which is a way to pay for everything. It's a way to get people to work. It's a way to have a valuable export, and it's a transition fuel into some of these other greener energy and tech companies that will be the salvation.
Yeah, great question. And look, I have no more specific information than you or anybody else does by reading the press. I'll start by saying that. I will add to that. If I was a betting person, I'd say yes, it will happen. I think there are challenges, but I think there will be movement on that front. I think again we've woken up to the fact that we can't have the luxury of not doing X because this isn't perfect, and Y because that's not perfect, and Z because we don't like the people who are involved in that. I mean, by the time you go through the list, we don't do much of anything. And I don't think any of us wants that. That's not this government. So I expect there to be significant movement. We'll see what form that takes. With respect to the CIB's involvement in that, we have had some indications that there will be a change in our mandate to allow us to participate. We currently cannot because it's not perfectly clean. I think the last government that sets our mandate. I mean, I sometimes joke we're like, infrastructure mercenaries, right? We're there to deliver on whatever the government of the day wants us to. I think we've assembled a great team and have delivered results. They chose to, I think, make the perfect the enemy of the still very good and necessary. And I think that may have been a strategic, I think if they had a do-over, they might want to rethink that. And I think as a society, we're rethinking that, and this government certainly is on that page of rethinking it and moving things forward. So we're really excited about the potential of LNG in particular and our role in the future, but we're still in wait and see mode at the moment, Peter.
Yeah, deeds, not words, is what people are waiting for. There's a show me mentality, folks. We're running out of time. Unfortunately, there's lots of questions here, so I'm going to try to combine a few of them, do less talking, and put it back to John and Pat. There is a reference, of course, to housing. And Patrick, you spoke of the 10,000 rental homes under development in Halifax. Rental construction is booming in many parts of the country, here in Atlantic Canada. There's question as to the risk that this may pose in terms of market concerns, overbuilding, for example, the risk that this poses to investors. But also, in the construction industry over the last 25 years, there's been lots of conversation with contractors and all aspects of that, and the existing infrastructure supporting new housing projects. But the person power, labor issues, getting people, on the job, hammers in hands, electricians, plumbers, drywallers, skilled trades. The Nova Scotia Community College, just keeping it here in Nova Scotia for a moment, there's a 2 to 3 year waiting list for skilled trades. That also, I think, has to be calibrated. Your thoughts on that with new Canadians coming in and trying to get people with those skills. We talk a lot about doctors and other professions, less so about labor. So just some of your thoughts on this and the bureaucratic malaise. I hear it from local companies here in Pictou County, like Beloved Construction. They can't get through the wall of bureaucracy to get approvals.
Yeah, so that's, the approval piece, definitely an issue that we're hoping to see some progress on. Some of it's at the municipal level, so that they have to do their part too. Um, in terms of labor, it's crucial. We can't build these nation building projects or housing, whatever it is, without the labor. And, having the mobility of labor is going to be key. We saw that in, the drive to Alberta over the, couple decades ago, until about 10 years ago, and then in Newfoundland and Labrador during their big surge. So the construction sector is mobile. That will help some, but we don't have enough young people here in the region to fill the needs going forward. It's an older labor force typically than other industries, so we need a big influx, and immigration has been a really important part of that. My son's an electrician. His company he works with, they've scaled up dramatically over the last 2 years because of immigration. They were able to take on bigger projects and do more because they brought in people from all over the world to help from Eastern Europe, from India, and other parts of the world that are, they have the skills that are needed and can quickly upgrade them to play a role with these companies. So I'm concerned about even though there's still a focus on construction and health and in immigration right now, it's the slowdown in immigration in Atlantic Canada does concern me, and I think we need to continue to advocate that we keep a high level of immigration to offset the challenges that we have. Now, not net some of the temporary workforce, I understand pulling that back. Maybe too many students at some points that were scaled up too quickly in certain parts of the country. But really, the immigration piece, we need to put our foot on the gas there and make sure that we have the people to support construction, health, and other industries that really are still struggling.
We're really getting down to the end here, folks, and I wish we had another hour because there's so many great questions here. But I'm going to try to, again, condense a few short snappers here. One coming in from Mark. Where does AI and cryptocurrency fit into some of these decisions and perhaps the whole discussion around streamlining process? And with respect to Bill C5, John, you mentioned that. Is there and this is a bit of a controversial one, is there a contradiction between the goals of reducing red tape, speeding up project approval, and further involvement of Indigenous in some projects? Does that run contrary, or is there a way to do this in an overall holistic fashion?
So, personal view, make that clear at the beginning. I don't think there is a contradiction. I personally am with the Prime Minister to remove all of those things and still respect Indigenous rights. And it seems all the indications we have is that they still intend to do that. I know our process for getting deals approved demands a section in all our investment memos on duty consult. Have we satisfied the duty to consult obligation as a Crown corporation? We think there's a way to do it differently, to do it just as well, if not better. But time will tell. I don't know what they have in mind. We haven't had that conversation. I don't think on its face, though, Peter, that it is inherently contradictory. And the Prime Minister has gone out of his way in the last couple of days to make it clear publicly that he intends to fully consult and that it doesn't. And I understand the nervousness coming from Indigenous communities. I certainly do. We have a similar bill in Ontario that just got passed, and maybe maybe some would argue, I've heard it said, a little less thoughtful in the way it was passed than the one at the federal level. But time will tell, as you said, it's the walk, not the talk. So we'll see when we try and operationalize this how it all works.
Patrick, you want to squeeze in a quick response on crypto or AI? Is there a role?
Yeah, well, I think there are opportunities. I know there's a big project that's being considered at Port St. John that would involve a new data center. Creating the land that's available, access to the ocean, and access to clean electricity is all crucial for these types of projects. So again, accelerating the development of green, especially energy that can support these projects at a low cost. That's what they're looking for, and there's lots of that available. The hydro projects in Newfoundland and Labrador and Quebec that are moving forward, those can all be part of that solution. And then AI is something that every industry needs to adopt, and no less so than in construction, where there's a lot of inefficiencies and productivity challenges, where AI could certainly play a role to help those projects move forward more cost effectively.
Well, gentlemen, John, Pat, I sincerely thank you. This has been a very instructive 1 hour seminar, and I've enjoyed being part of it. I know my colleagues from McInnes Cooper as well, who've been following across Atlantic. And so I'm going to turn it back to you, Aaron, and I hope that we might be able to do this again, because there seems to be a lot of interest and, more importantly, a lot of opportunity cropping up all around Atlantic Canada. Back to you, Aaron.
Yes, thank you so much, John, Peter, and Patrick. Amazing insights, so many questions. I am going to try to summarize those when we send our follow-up email to all of our registrants here, because we didn't get to all your questions. But as Peter noted, great discussion. Thank you so much for your participation. Thank you for joining us here today. Everyone who registered, as I mentioned, will be getting an email from us in the coming days, which will include all the slides and a recording of the discussion today, as well as our just released Investment Outlook publication for 2025. A big thank you to our sponsors, Canada Infrastructure Bank and McInnes Cooper. We couldn't do it without you. And again, thank you so much to John, Peter, and Patrick for your time today. And thank you all for joining us. Have a great day.
Thank you.
Cheers.
Thank you.
Bye now.